Hi guys, welcome to my channel. This is the Unorthodox Investor, the channel where we obsessed about personal finance. So in this episode, we're going to be discussing what happened in the stock market last week, and we're just going to be doing a little bit of a deep dive into why things happened, because quite a lot happened actually last week, especially when it comes down to things like the US stock market. So we'll probably focus on that one, even though I'm UK based. My accent's a little bit funny because I'm from Scotland. We're going to be probably focusing a lot on the UK market in future episodes. But this episode is probably going to be focused on the US market because of the movements that have been going on, and we're going to be seeing why things have happened. So if we first have a little look at my watch list. So I have set up a few watch lists, and these are the shares that I've been looking at for years and years and years. So I started back in 2009, and since then I've got a kind of following, a kind of core following of stocks that I've been watching for years, some that I've bought into, some that I haven't, many that I've just watched from the sidelines, many of the American stocks. I was never in GameStop, I've never been in Tesla, so it's quite interesting to watch these guys, and I've got a core portfolio as well of stocks that I invest in, and I enjoy the stock market. So let's have a little look. I have created a watch list called US Monsters, so let's dive straight into that. And these are the top stocks in the US by market cap. So it's always interesting because these guys are the ones that are going to move the S&P 500 up and down and affect a lot of people's investments, because whether you are an investor in individual stocks or whether you're an investor in the S&P 500, these stocks will have an impact on your portfolio. So the first one to mention would be Amazon, of course. I mean, that had a cracker of a rise, 13%, just over on Friday. So that is an absolutely monster rise. I mean, when you look at UK stocks, they kind of barely move 1% or 2, so 13.5%, and I'm having heart attacks, you know. I'm not the most calm investor in the world, but you know, I've learned to be. You have to be. So Amazon going up 13.5% is ridiculous because the size of it as well. I mean, it's about 1.7 billion US dollars worth of a market cap, and so it's an absolutely huge movement there. But they had better than expected results. So if we just dive in here, we can have a little look. You can see that Amazon profits have surged, and I think investors were really keen to see that the company was increasing the price of Prime membership, which in the long term is going to increase the profits of the company. If you are not aware, then the Amazon profits massively from one of their segments called AWS, Amazon Web Services, and that's a kind of cloud computing kind of processing service which they rent out to companies, all the big companies in the world, to be honest. So that drives the majority of their profits. So at this stage, they're actually trying to monetize more of their other services. So things like Prime, where they've got a lot of people hooked. You know, most people you know will have Prime or a large subset. And so they're trying to monetize that a bit more. And so the stock market and investors particularly have really liked that. And so that's why the share price increased. But 13.5% is only making up for some of the losses that they have had this year so far. So if you look at the year-to-date graph, we're actually down 7.5% in the year so far, and that's only a month, right? So we're only just into February, so it's still gone down quite a lot this year. Let's go back and have a little look at some of the others. So let's have a quick look at Tesla. Tesla's been going up and down, of course, quite a lot, as it always has. The year-to-date graph is down quite a lot, so it's down 23% year to date from what Google says. So it's the tech stocks have been taking quite a big hit. If we look across the board, lots of the US stocks have been taking a hit, lots of the tech stocks. So investors are really worried that the tech stocks are overbought, and it's my personal view. So one thing I look at is money flow in the market, kind of behavioral finance. You know, where are people thinking? You know, where's the money going? And you know, when it comes out of different investments, where else is it going to go? So tech stocks were very hyped up, so everybody took their money out of wherever they had it, And due to all the stimulus, there was more money floating about, and that all went into tech stocks through from 2020 and 2021. The markets were really overinflated, or maybe they were rightly priced, who knows, but a lot of that money went in there. And then the money flow has sort of dried up a little bit, which means more money is not going in. And so some investors are taking that opportunity to sell out, and there's become this little bit of a panic with tech stocks, like, are they overvalued? Lots of people are selling out, and that's causing a little bit of a decline. So you can see even Microsoft, who are an absolutely solid company, down 8.61% in the year. And then let's check out Apple as well. So Apple are down 5%, so not too bad. And then we get to Facebook. So Facebook had the largest market capitalization drop in one day in history. Just over $230 billion was wiped off their market cap on the 3rd of February. So you can see that massive decrease there, and that means that they've lost 30% this year so far in 2022, which is absolutely massive. So it could be an opportunity to buy. It could be an opportunity to it might just be just a hold and wait. But it's one of those ones where investors were disappointed that Facebook has essentially stopped growing at this point, because for the first time ever, they lost daily users. And that's never happened before. So Facebook has always been on this meteoric rise, and more people on the platform, and investors are a little bit worried that they're just going to hit a plateau point, stop growing, and if you stop growing, then it means you basically start declining. So it's just a chance to see what's going to happen with Facebook. So let's have a little look at the UK stocks now and see kind of how the UK stocks have done. Across the global markets have actually gone down in 2022 for the large part, but the UK stocks have actually stayed level or gone up. So I tend to follow some of the largest stocks in the UK market as well. It's where I see a lot of safety, and these stocks tend to be value stocks. So on the US market, lots of the tech stocks have a PE ratio, so that's a price to earnings ratio, which we'll delve into that a little bit more in future videos. But the PE ratios tend to be around about 40, maybe even higher, 50, 60, 70, when it comes to Amazon and companies like that. And that's because investors are betting on a lot of future growth. Whereas in the UK market, the PE ratios tend to be a lot lower, maybe around about 10, 12, 15, maybe even 20, but a lot lower than the US market. And so the UK stocks are considered value stocks. There's a lot more kind of earnings kind of flowing back to investors, so we get a lot more dividends in the UK stock market as well, due to tax reasons as well. So let's have a look at the UK stocks. So my kind of one of the stocks I follow quite a lot of is BP, because the oil price is so high at the moment, and that kind of flows through to the share price. So if we look at BP, for example, year-to-date increase. Sorry about that. The year-to-date increase is around about 15.6%. So it's actually a little bit more than that, because the way Google calculates their year-to-date gain, it's on the opening value as opposed to the closing value of December 31st. So it's actually a little bit more than that, because there was a big jump on January the 4th when the markets opened again. So you can see that oil has had a massive rise. It's now above $92. So it's definitely something that is kind of underpinning the share price of these oil companies like BP and Shell. So you can see the year graph has shown that the oil companies have done quite well. So they're considered value stocks, and in my opinion, they're very inflation busting, because the things that are creating inflation are things like the oil price increase. So when oil increases, that means transport costs go up, because transport uses petrol, which is made from oil. And so oil price is a big driver of inflation. So one of my inflation busting techniques is to invest in companies that are driving inflation, essentially. So companies like BP. So BT is another interesting one that was up quite a lot on Friday as well, and they've done quite well recently. They announced their year results, which were mixed. I've not yet delved into them too much, but we will do that on this channel. But they announced a price rise of, I think it was about 10%, which they're going to build in this year to their customers. And what that means is that BT are going to be getting a lot more revenue and essentially a lot more profit. They're expanding into 5G and they're rolling out fibre, which they're going to be able to charge their customers more for. So essentially BT is seen as a very inflation busting stock, which is why it's done quite well recently. You can see kind of year to date we're up 11%. You can see over the year graph being a bit up and down, but essentially it's quite an uptrend. So one to put on your watch list. And then you've got the other classics like British American Tobacco. It's done quite well recently in anti-inflation stock, because no matter how much they put up their prices, people keep buying their products. They've kind of got a monopoly because no one's allowed to advertise, so they've got that advantage as well. And then we've got the likes of things like Aviva, who are an insurance company. They have a ridiculously low PE. I mean, almost every single person you know will have insurance with Aviva one way or the other, whether it's car insurance, whether it's life insurance, or even just a retirement portfolio, almost like a pension. You know, it might be with Aviva. So you will have money with Aviva. So they run a lot of assets. Then you've got the banks. So the banks did pretty poorly towards the end of the week, but overall, HSBC has been one of the best performing banks on the UK market. So that's down to sentiment, really, and the fact that the bank was really underpriced. So you can see a little bit of a bull run starting to happen here, and that's because, like I said, sentiment. People believe that the kind of US-China tensions are not going anywhere. They're not, the tension's not escalating over Hong Kong and Taiwan, and instead that focus has then moved to Russia and Ukraine, and that's taken some of the pressure away from HSBC. And it is just a banking giant. It's got a global reach. The global economy is getting better, and so the HSBC share price has been recovering, because you can see this year graph. It looks like they've gone up quite a lot, but let's zoom out a little bit further, and actually you can see they've historically, if we go to the max graph here, historically been between about £5 and £7 or £8 a share, and they're now at £5.43. So you would assume, maybe that's about right. And if you look at their profits, which we'll dive into at some point in future videos, then you'll see that it's actually very fairly valued, if not undervalued, based on the earnings. So. And they've got decent possibilities for growth as well when it comes to Asia and the money flow there too. So that's definitely one that I am bullish on. And then you've got UK banks like Lloyds, so they're pretty much doing the same thing. They had a terrible day on Friday, but stocks go up and down. That's just part and parcel of it. You can see year to date they've gone up about 6%, and over the year it's definitely been an uptrend. As the interest rates rise, we should expect to see banks rise as well. But I mean, they're a very safe investment. Banks are making profits these days, and there's enough kind of money flow going around that banks will continue to make money in the near term at least. So that's kind of a rundown of the UK and US markets. I'm creating an unorthodox investor portfolio for us to watch, and so you can see that down in the on your right hand side there. So what we'll do is we'll add to that. We've got 1, 2, 3, 4, 5, 6, 7, 8 stocks there, or funds or trackers, and we can add to that, remove it, and we can kind of build that around this channel, around what you want to see, and that can be our core portfolio where we follow, every day or every week, and we can see what's happening with those stocks, and we'll take ones out and take ones put ones in depending on what you guys think. We can really analyse them, see what the positives are, what the negatives are, and see what happens on a daily basis. So, if the next GameStop comes along and it looks really exciting, we're going to put that there and we're going to see what happens. At the moment, I've got just some of the top guys, the Amazons, Teslas. I've got the S&P 500 index in there and the FTSE 100, because it's always useful to see, compared to individual stocks, what the markets are doing as well. So that's it for the first video. Hopefully you found that entertaining and interesting. We'll dive into more and more as we go along. And we'll leave some comments in the comments section, and we can I can analyze whatever you would like me to analyze, because this is what I do. This is what I'm obsessed with. So I'll see you soon.